And we are live. Good evening, everyone. Tonight we will be discussing updates to the stimulus package for individuals and small businesses. And then we will jump into how AMC Theatres is potentially on the brink of filing for bankruptcy. As I've been accurately predicting and forecasting on this channel since the pandemic first hit, there's a ton of dominoes that has to fall. You're going to see a lot of bankruptcies, mergers, and acquisitions as this unfolds because there's too much debt and leverage in the system for a lot of these corporations. Even after they get bailed out, many of them are still going to have to file for bankruptcy. And then you have to begin to ask yourself a really tough question. What is the economy going to look like? What is the business environment going to look like when there's really only four major retailers left? I predict that when this is all said and done, we're only going to have Amazon, Walmart, Target, and potentially Costco as retailers in this country. A lot of these small and mid-sized businesses, they're not coming back. Even with the PPP program, even with the bailouts and the stimulus checks, it's not going to be enough for them to be able to compete. Everything is shifting online as it is. This is just accelerating everything. And when you look at AMC Theaters, think about this. How many people is actually going to want to go sit in a movie theater and be close to people after experiencing this? So there's a lot of shoes and dominoes that have to fall before we can ever even think about getting back to normal. So as you come in, please like the video, share the video, subscribe, make sure that you hit the notification bell, make sure that you join my mailing list because many of you have been telling me that you're subscribed to my channel and you have the notification bell set to all, but YouTube is unsubscribing you. And I'm starting to attract a lot of trolls. My channel is starting to get flagged a lot. So in the event that this channel goes down and I keep getting strikes, make sure that you're on the mailing list so I can update you on my new channel if I have to create a new YouTube channel. And if you want to contact me, simply follow me on Instagram, shoot me a message, and we can begin a dialogue. And for those of you that want to support the content financially, a link to my PayPal is in the description. And I see a donation coming in from Alpha Rock G. Thank you so much. As if you guys can hear me nice and clearly, just type 1 before we begin. I know yesterday we had a reverb, so I want to make sure that the audio is good for today. And then we'll start the live stream. Okay. So one of the biggest problems with the stimulus check, now we're talking about the $1,200 check for individuals and the $2,400 check for married couples. The IRS basically was saying that if you filed your tax return in 2018 or 2019 and they have your banking information already in the system, there was no portal for you to go there and update anything. They would just mail you a check. And a lot of people were getting frustrated because they were saying to themselves, how do we know if they have the correct information? How do we know if I need to update something? Where do I go? They still don't have a website for you yet. They're saying that by the end of this month, around the 18th, 19th, 20th, they'll have the portal up and ready. So if you need to change your address, if you need to update your banking information, there isn't a website for you if you filed, keyword, if you filed a tax return in 2018 or 2019. So as you can see on the website, this is the irs.gov's website. This is for non-filers, right? So if you didn't file a tax return, this portal is for you. And I'm going to read the information for you right now. I'm going to drop this link in the chat. It's very important that you pay attention to what's going on and you do everything correctly. Please pay attention to this. So it says, who is eligible for the economic impact payment? You have to have a valid social security number, obviously. could not be claimed as a dependent of another taxpayer, and had adjusted gross income under certain limits, who will receive the economic impact payment automatically without taking any additional steps. Follow me. So some of you, because you get SSI and other government benefits already, you don't have to worry about going to this portal and entering in your banking information because you're already on basically, in the government system if you're receiving some type of government aid. So it says individuals who filed a federal income tax for 2018 or 2019, right? Then it says individuals who receive Social Security retirement, disability, or survivor benefits. Individuals who receive railroad retirement benefits. So again, if you're on SSI, if you receive Social Security retirement or survivor benefits, they already have your information and they're just going to simply deposit the money into your bank account. Then it's also for those who filed a tax return for 2018 and 2019. Michelle, thank you so much for the donation. I appreciate it. Now, this is very key. You have to pay attention to this part. Who should use non-filers? Enter payment info to provide additional information to receive the economic impact payment. You had gross income that did not exceed $12,200 for 2019. These are people who should use the non-filer portal. That means as an individual, your gross income did not exceed $12,200. And if you're married, it cannot exceed $24,400 for 2019. Were not otherwise required to file a federal income tax return for 2019 and didn't plan to. Right? You go here and you enter in this information. So let's just say this is for people who you weren't employed. You just been sitting at home. You haven't made any money. You don't owe child support. You can just simply go here and put this information in. For those of you that have a job and you've made $30,000, $40,000, $50,000, this isn't for you. They don't even have the portal set up yet for you. And this goes back to, like I was saying to you before, the government is just not equipped to deal with these type of things because now you've been sitting in your house now for 3 weeks, a month, and they still don't even have the portal up yet for you to go enter in your banking information. Now, if you filed the tax return, so if you made more than $12,200 and you filed the tax return in 2018 or 2019 and your banking information is up to date, you have the same bank account from when you got your tax return last year or the previous year, you don't have to worry about anything. The money's going to automatically be deposited into your account. The next step is now checks. And I want to read something to you because the way that they're going to give out the checks now, if for whatever reason the portal's not up and you have to wait, they're going to start mailing out checks the first week or second week of May, all the way up until June. So now think about this. It's going to go based upon your income. So the lower your income, the quicker they're going to mail you your check. The more money you made, so let's say you made $65,000, $70,000, you're going to be on the back end of getting your check. You might not get your check till, May or June or even July. And that's just the reality. It sucks, but that's just the way it is. I would encourage you to definitely get in contact with them and get everything that you need. Keep calling them. I know the phone lines are going to be swamped. The websites are going to be swamped. But listen, this is what happens when you are dealing with the government. And I see another donation from D. Flint. Thank you so much. Thank you to Robert Morales. This is really, really important. So listen to this. It says, wondering when you'll get your check. Checks will be distributed automatically to most people starting next week, the week of April 12, 2020. Eligible taxpayers who filed tax returns for 2019 and 2018 will receive payments automatically. As previously reported, automatic payments will also go out shortly to those receiving Social Security retirement, as I said before. The IRS is also building a second new tool expected to be available by April 17th The new tool, Get My Payment, will provide payment updates, including the date your payment is scheduled to be deposited in your bank account or mailed. Get My Payment will also allow you to provide your bank account information so that you can receive your payment more quickly rather than waiting for a paper check. Unfortunately, this feature will be unavailable if the economic impact payment has already been scheduled for delivery. So that's going to suck if they already mailed your check out and then the portal comes up and you try to update the information, you're still going to have to wait for the check to be sent out. So I can definitely see how this is going to be extremely problematic for a lot of you. And just think about it. I mean, it's only $1,200. It's not even enough money, the $1,200, and they're making you wait weeks, potentially even months for this. So again, the IRS.gov website right now, the portal that they have over here, this is for people who did not file a tax return in 2018 and 2019, and they make less than $12,200. If you filed a tax return in 2018 and 2019, and you make more than $12,200 as an individual, or more than $24,400 as a married couple, you have to wait for the new portal to be built to update your information. Or if you did file a tax return and everything's up to date, they're going to automatically deposit the money into your bank account. I'm going to make that clear. Now, this is something that I've been saying before. I've been saying time and time again. It says many Americans say the virus stimulus won't help with 1 month of household bills. And this isn't complicated. It's basic math. If you have a car note, if you have a mortgage, if you have a cell phone bill, which don't forget, you can get those bills, you can put that into forbearance. But even if you think about just living expenses, getting your hair done, groceries, food, $1,200 is not enough money. And remember that $1,200 is just a one-time payment. It's not even a payment that's going to come on a monthly basis. So from an investment standpoint, you know they're going to have to make the money printer go because $1,200 isn't enough money. And now we're going on our second month, and most people haven't even received their checks yet. So let's read a little bit of this article. It says the $2 trillion relief package aimed to helping Americans make ends meet while the economy is virtually shut down moved through Congress quickly. But new statistics show a sizable portion of people will need more money to stay afloat. A survey conducted by Bankrate reveals that out of 67% of Americans who anticipate receiving a stimulus payment, 31% say the check won't sustain their financial well-being for even a month. 8% of the 31% said the money won't be enough to help them at all to cover their expenses. Now, you have to understand that most Americans live paycheck to paycheck. I think there's something like 60 to 70% of working age Americans don't even have more than $500 in their bank account. So this is not going to be enough by any stretch of the imagination. And I like how they have this graphic here where it says the coronavirus stimulus checks matter more to the lowest earners. And this goes back to the disproportionate amount of deaths that's happening in minority communities. Many of us, prior to this even happening, we didn't have adequate health insurance. Many of us, we don't have adequate banking. Many of us, we have pre-existing health conditions, whether it's diabetes, whether it's hypertension, high blood pressure, etc. So when you add this in, this is a recipe for disaster. And as you can see here, it has a breakdown. Stimulus checks matter more to lowest earners. We asked how important, if at all, would this stimulus money be to your financial situation in the near future? For people making under 30K, they said very important, right? For people from 50 to 70K, 41%. People above 80K, 49%. But you can see the people under 30K, they need the money. That's just the reality. A lot of people, they're in, dire straits. So a lot of you ask me, like, why am I investing in gold and silver? Why do I invest in Bitcoin? Because I understand that the government's going to have to do more. And governments have to print money. Well, markets move of supply and demand. The more supply of money that's chasing after goods and services is going to create inflation. So you're looking at more bankruptcies to come where they have to bail out more businesses. And you already see Trump asking for another $250 billion for the PPP program and the EIDL program. So just follow the train of logic as an investor and you can understand where this is going to go. And right on cue, it says Senate adjourns until Monday after Democrats block McConnell's bid to add $250 billion in small business aid. As I said, more money printing. They just did $2.3 trillion the other day with the Fed, with the whole new lending program. Before that, it was 6.2. I told you altogether it's going to take about 16 to 17 trillion dollars to get this economy up and running again. That's inflation. They have to do this. There's no way that the economy is going to be able to get back to normal. So if you're an investor and you're looking at this, you need to be trying to hedge yourself and protect yourself, or investing in stocks that you feel are going to appreciate really, really well. And that goes back to when we begin to see these mergers and acquisitions. Do you believe that Amazon is still going to be around 5 years from now? Do you believe Walmart is still going to be around 5 years from now? Do you believe that Apple is still going to be around 5 years from now? Well, then those are the type of stocks that I want to be putting my money in. Because as I said to you, when this is all said and done, they're predicting that there's going to be over 1 million bankruptcies in the next year and a half. Well, if there's 1 million bankruptcies in the next year and a half, what does it look like as far as competition for Amazon? Do you think Amazon's going to get bigger or smaller? Do you think Walmart's going to get bigger or smaller? Do you think Target, do you think Costco is going to get bigger or smaller? And then now with so many stores, retailers being shut down, the only essential businesses open is Amazon, is Walmart. So they're gathering up more market share right now. So you really need to make sure that you're paying attention to the opportunities that's presenting itself. Now let's get to the whole SBA loan program, the PPP program, particularly in the EIDL program. As you can see, some people are starting to receive their payments. As I said to you before from the very, very beginning, if you read the CARES Act legislation for businesses, and then you go to the SBA.gov's website, I said two things were going to happen. Either the economy is doing so bad that the government is literally going to throw money at you to not lay off your employees, or it's going to be so chaotic, so many different loopholes and provisions that it's going to be damn near impossible to qualify for these loans. And then in the legislation, it said up to $10 million, but then on the SBA.gov's website, they say only $2 million. So you can see this guy right here. He tweeted out, woke up to $10,000 in my bank account from SBA.gov this morning via the EIDL loan. And this guy put up, American small business owners are finally seeing $10,000 deposits into their bank accounts this morning from the SBA EIDL grant. To clarify, the SBA still claims that it's $1,000 per employee for anyone expecting the entire amount. This goes back to, like I was saying to you before, this is the confusion, because when the legislation was passed in the bill, it never mentioned anything about $1,000 per employee. So some people are getting the full bailout with no employees, and then other people aren't getting a bailout and they have 30 or 40 employees. So it goes to show you how chaotic this system is, where they're literally making it up as they go. Right? Literally making it up as you go. Well, you don't have to believe them, but you can see it says, ACH credit, SBAD Treasury. So he has the payment in his bank account. Right? And that goes back to, is it a grant? Is it a loan? Is it forgivable? Is it not? The legislation says one thing. Then it says the legislation says one thing, but the SBA saying another thing. Then you have to worry about the banks, as I was saying to you before. The banks are part of the SBA program, but they're picking and choose who they allow to apply for the loans. And they're really only giving out applications or processing applications for people that owe them money and not for regular customers of the bank. Because they're basically trying to cover themselves because they don't want you to default if you owe them. So it's a lot of bureaucracy, a lot of red tape, and a lot of games that are being played. And if you go back to my very first video, I predicted that this would happen. As you can see, back on April 6th, this person tweeted out, "Why is nobody investigating why the SBA is changing the rules on the EIDL grant? The law says that you should get no more than $10,000. They put it up to $10,000, and now they're putting it to $1,000 per employee, which is not the promise of the grant. Congress needs to step up." And you can see a lot of people tweeting out, and they're pissed off and they're mad. And then some people, like myself, I applied for it. I think it was like March 28th or 29th. I applied for it, and I still haven't received anything. No confirmation email or anything. So some people are getting it, other people aren't. And I would encourage you that if you've filled out the application already, get on the phone, because I guess you have a confirmation number on the application when you go to the portal, but like you don't receive a confirmation email. So take the confirmation number from the portal that you have and make sure you contact them so that you can try to find out what's going on with your money, with your funding. But they're trying to put more money in to work for you, another $250 billion. I believe that they're going to start negotiating that process in the next Monday or Tuesday, and that's for the PPP program, not the EIDL emergency grant / loan that may be a loan, that may not be a loan. Who knows? So just make sure that you get in contact with them to find out what's going on. Which leads me to the next part about bankruptcy. If you read The Creature from Jekyll Island, if you go back through history, you would see that bailouts have been going on, going back to the 40s, the 50s, the 60s. America has built out New York City. America has built out banks. America has built out railroads. This has been going on time and time again. The only difference is the bailouts just get bigger every crisis. And I've told you that you're going to see more mergers and acquisitions. You're going to see a lot more companies have to file for bankruptcy because they have too much debt, which is why the Fed announced in that $2.3 trillion lending facility that they just announced yesterday, or I think it was the day before yesterday, they're going to start buying junk bonds. Think about that. They're going to have to go out and buy junk debt just to keep the economy floating, keep the economy afloat. And I told you this. This rewards bad businesses. If you are a businessman or woman and you're doing the right thing and you're not over leveraging and you're not gorging yourself on debt, you don't get a bailout. The companies that do everything wrong, they're too big to fail. And you know what happens when they get this bailout? They just get bigger. So it makes it hard for you to really go out here and compete in a fair economy based upon competition, because your competition can get access to funding when they make mistakes and mess up. That's what we have bankruptcy for. But the small businesses are going to have to file bankruptcy. The mid-sized businesses are going to have to file bankruptcy. The too big to fail, they're just going to get bigger. That's what's going to happen. It says, do you think if black investors had their stuff together, would buying AMC Theatres be a great investment to buy in bankruptcy? Absolutely not. Everything is shifting to digital content in the first place. The movie theater business was a failing business to begin with. And I keep trying to tell you guys, money, everything's about to be digital. Everything is going digital, which is why you have so much streaming with Hulu and Netflix and Disney Plus and more content, original programming. Even I think Apple TV has a streaming service. So the movie theater business was already dying to begin with. This is just going to accelerate it because now, as I said, even if today they rolled back the whole stay-at-home quarantine, social distancing measures, most people are not going to feel comfortable going into a crowded type movie theater that they don't properly clean and sterilize anyway. So if I was looking at an investment, I would be focusing more on a streaming platform with original content, or trying to partner up with an established entity like a Netflix or Hulu. But buying movie theaters, brick and mortar, the brick and mortar business model is about to be dead. I'm going to get to that in a second. What Amazon, Walmart, and Costco is about to do to brick and mortar businesses, they already was killing brick and mortar businesses. Strip malls all over were shutting down because everything is moving to e-commerce. And more people are going to get introduced to ordering their groceries online. And every 2 weeks, the groceries just get dropped off at the front of their door. And I'm going to get to that article in a second. So I really think that you need to really start looking at, again, if I'm an investor, what do you think is going to be around 3 years from now, 5 years from now? I don't want to try to play with Carnival Cruise Line. I don't want to try to gamble on Boeing. I don't want to gamble on American Airlines. When I got healthy companies that's down 30% or 20%, like Microsoft, like Apple, like Netflix, like Google, like Walmart, these businesses are going to be here 5 years from now. They're going to get bigger. They're going to take more market share from a lot of these small mom and pop brick and mortar stores. So it says record bankruptcies predicted in the next year as unemployment soars. Personal filings could reach 1 million, Fed economist says. It says, bankruptcies related to the pandemic shutdowns will set records in the next 12 months, according to Edward Altman. Whether it's corporate bankruptcies or personal, this is unprecedented. Altman said in an interview, "We will break the record in dollar amounts because there are much greater amounts of debt outstanding now than in any prior downturn." Remember, I told you guys, consumer debt, household debt, hit $14.1 trillion 2 months ago. That was higher than that's higher than the last recession that we had. So think about all of the household debt as far on top of corporate debt. It says new research from economists at 3 Federal Reserve banks show virus-related bankruptcies could rise by 200,000 to reach almost 1 million unless government stimulus programs offset the increase. By comparison, personal bankruptcies peaked at 1.5 million in 2010, near the end of the Great Recession. The model doesn't predict that the U.S. bankruptcy filings will be as high as after the financial crisis, but it could happen because the economy could deteriorate more than what we assume, and their model doesn't take into account medical bills, which could be a big factor for some households during this public health crisis, depending on how much the government helps with these expenses. And this goes back to crashing the healthcare system. What's going to be the long-term effect? Because even the 26,000 people that's recovered from the virus, many of them are going to have long-lasting damage to their respiratory system where they're going to have to be on asthma pumps and medication going forward. So this is going to put a strain on a lot of states, a lot of health insurance providers going forward. So what does that mean? The Fed is going to have to step in and do what? Make the money printer go burr. That's it. If they don't, stock market crashes, health insurers go bankrupt, states are not making enough money, because remember, a lot of states fund themselves through tax revenue, right? Through writing tickets, through sales tax. Well, guess what? If people aren't out shopping because we're quarantined, if they're not writing enough tickets to meet their quota, well, what does that do for local pension funds? What does that do for local, state, and local budgets if they don't have a lot of the revenue coming in that they used to have, right? It becomes a domino effect. Less revenue coming in, less people working, putting a burden on the health insurance system becomes a problem. So you know that there's more bailouts, which leads us to AMC Theatres. Bankruptcy is likely. AMC Theatres, whose business has effectively shut down because of the pandemic, looks increasingly likely to file for bankruptcy with its cash reserves dwindling, according to Wall Street analysts. In a report Thursday, MKM partner analyst Eric Handler wrote, "Based on our view, with the theaters will be closed until at least August, and our belief that AMC lacks the liquidity to stay afloat until that time. We expect the company will soon be faced with filing for bankruptcy." He downgraded AMC Theatres stock from neutral to sell. AMC reported $265 million in cash and equivalents on hand, plus $332 million available via credit lines as of December 31st, 2019. AMC is the exhibition company we view with the least financial flexibility, Handler wrote in the report. We believe the company's monthly cash burn rate in a no revenue environment is running at $155 million per month, which likely keeps AMC liquid until June/July. So let's look at the stock. I want to show you something. This goes back to the question that was posed earlier about pooling money together to buy a theater. This is 2017. The stock was traded at $35 in 2017, and it's done nothing but trade down. That's because more and more people are streaming, are staying at home. So the movie industry was already a dying industry as far as people going to movie theaters. Stock is almost at $2. Stock is getting hit heavy. Now, if they're in trouble, if you're looking at opportunities, start thinking about streaming platforms. Then start thinking about the networks that are going to provide the data and the internet providers for streaming, because streaming is only going to become more popular. You have to really start thinking about a lot of the opportunities that's going to be out here. If these retailers have to go bankrupt, if movie theaters have to go bankrupt, start thinking about REITs. A lot of REITs make money based upon malls, based upon strip malls, based upon brick and mortar businesses. So there's going to be a lot of opportunity, like I said to you before. Certain parts of the economy is going to be in a depression. Other parts of the economy is going to feel like a recession. And then there's going to be opportunity in that, right? You're going to have a lot of difficulty mixed with opportunity, which is why you need to start really looking at businesses, long-term businesses, that's going to be able to survive what's coming. Because I said to you before, there are more shoes that have to drop. There are other dominoes that have to fall. That's just the reality. And the only way that they're going to get out of this is by printing more money, which goes to, a lot of you have been asking me like, well, what kind of mining stocks do I hold? Well, this is one of them. Newmont Mining. It's pumping. Pumping. You know why it's pumping? Because they understand that the demand for gold is going up. Because any person, I've been telling you this for weeks now, for months now. This is what I want to own. So when gold sold off, I didn't care. I bought more. And this is just one of the precious metal companies that I'm involved in. Precious metals companies that I'm involved in. You know, I'm involved in a lot of junior miner companies that they haven't found any gold. You know, they're looking for gold. They basically explore and look for gold and silver because it's hard to find gold and silver to meet demand, especially when all of this money printing is going on. And remember, this is one country printing all of this money. You know, I believe that we're going to see $2,000 gold, and you know, I wouldn't be surprised if gold doesn't hit $2,000 in the next 2 months. I wouldn't be surprised because I know that we're going to have to print more money. We're just going to have to. And there's 241 of you watching this. Hit the like button, guys. It helps the content get out there. Kramer worries that post-pandemic U.S. could have less than 3 retailers: Amazon, Walmart, and Costco. If we come out of this sooner than other small businesses can open, this is a quote from him, if we come out of this later, there are going to be 3 retailers in this country, the Mad Money host said. There's going to be Amazon, there's going to be Walmart, and there's going to be Costco. Now, this trend was already happening anyway, guys. But follow the article. That is something the government cannot afford to have happen. So he's calling for, this is a capitalist calling for basically more money printing bailouts. Because Wall Street is addicted to bailouts and cheap money. This is not about capitalism. It's not about trying to outcompete each other, make better products and services, become more innovative, growing your balance sheet. This is all about financial engineering, money printing, low interest rates. That's it. It's almost like a mini stimulus package for Walmart associates, he said. Walmart plans to hire 150,000 new employees through the end of May to work in stores, clubs, distribution centers, and fulfillment centers to keep up with heightened demand. So think about this. While businesses are contracting, while AMC is talking about filing for bankruptcy, while small brick and mortar stores are having to shut down and close their doors because of quarantines and social distancing, who's open right now? So who's gaining market share right now? Walmart. Who's hiring right now? Walmart, Amazon, Costco, Target. And who's laying people off? Small businesses. So if you just follow things, right? Follow a trace route. It's not complicated of where your money should be flowing to, right? As far as investments are concerned, this isn't complicated. You don't have to make this like it's a science project, like you're studying for an exam to be an astrophysicist. This isn't complicated, right? Certain companies are contracting, other companies are growing. I want to be investing in companies that are growing and gaining market share. Because that means if they're growing in a recession/depression, when everything comes back and it starts to boom, now you're going to really start to see it take off. Then it says Costco has seen near panic buying by consumers looking to stock up for possible lockdowns. Costco managers in some parts of the country said the stores have been busier than the holiday shopping season in the lead up to Christmas. Amazon on Monday said it plans to hire an additional 100,000 warehouse workers to deal with the crush of online orders. The e-commerce giant is already raising pay for warehouse and delivery workers by $2 per hour in the United States through the end of April. So now again, like I said to you, opportunity mixed with difficulty. So yes, jobs are being lost over here, but then jobs are being gained over there. You have to look where the money is flowing. Do not be a person that's just sitting around and being upset and frustrated and watching a bunch of conspiracy theories. Go and find where the money is flowing and get a piece of that money to protect you and your family. And I want to read this article because this is a really, really good article. I'm not going to read the entire article because it's long, but it's really, it highlights a lot of what I've been saying on this channel. It says Amazon was already powerful, but the pandemic cleared the way to dominance. Amazon is getting ready to dominate. They are going to dominate in a major way. And it may raise some antitrust issues with the government because Amazon's well on its way to becoming a monopoly. Literally becoming a monopoly. So it says, along with the restaurant and travel sectors in the United States, the retail industry has been hit especially hard, while grocery stores and online retailers have been deemed essential and continue to operate. Department store chains and other non-essential retailers, big and small, have been forced to close up shop. The closures are dealing potentially catastrophic blows to cash reserves and accelerating trends in consumer behavior that spell doom for large swaths of brick and mortar retail and the 16 million people the industry employs. Nearly 1 million retail workers were furloughed in a single week recently. That means 1 million people lost their job, according to the Washington Post. And more than 250,000 stores have been shuttered, according to Global Data Retail. Some analysts predict 15,000 retail stores will close permanently this year, which would mark a 60% increase from last year's record closure. My first thought, this is a quote, is the number of people who work in retail and have had careers in retail that may not have the same job or even companies to go back to. And this is what I've been saying to you guys. It's not going back. It's not going back. It's not going back. They're not going to go back to what they used to be. They're just not. It says as foot traffic in non-grocery retail stores declined more than 97% during the last 2 weeks in March. Walmart stores sales rose 20% as much of March over the same period last year, according to the Wall Street Journal. The company has said it is looking to hire 150,000 new workers. So their store sales are rising 20%. Rising in the middle of a pandemic, while everyone else is contracting and shutting down. For department stores like Sears and JCPenney that were already on the brink of closure, the pandemic could be the final nail. For others like Macys and Kohls, whose situations weren't previously great, but not quite as dire, extended closures could lead to a cash squeeze within 5 to 8 months and potential defaults on loans, according to analysts at Cohen Research. To get ahead of the situations, permanent store closures and layoffs are plausible. The federal government has boosted unemployment pay by $600 a week for 4 months. So Macys and Kohls is in trouble. Again, what? Too much debt. Sears and JCPenney, they're in trouble. You're going to see them gain more market share. You're going to see it. You're going to see they're going to get bigger. They're going to get bigger and bigger and bigger. And this is the last part. And I'll put the article in the chat for you guys to go and look at this on your own. It says, while Amazon has struggled to get ahead in the grocery business, Walmart is already the largest seller of groceries in the United States, with grocery sales that are 50% larger than the top traditional grocer, Kroger. 3 years ago, Amazon's grocery delivery services were still struggling enough that the company spent nearly $14 billion to acquire Whole Foods. Today, things are different. The company rolled its Amazon Fresh delivery service under its main Prime membership program in the fall, simultaneously eliminating the extra monthly fee and lowering the barrier for usage for customers. In the weeks after those changes, Amazon's grocery delivery sales basically doubled year over year, according to estimates from research firm Second Measure. Now, during the pandemic, online grocery sales are soaring as many people try to avoid stores. This positions Amazon, which offers fresh grocery delivery from both Whole Food stores and Amazon Fresh warehouses, to become the go-to online grocer for Prime members, with competition from Instacart, Walmart, and smaller regional players for non-Prime members. So you have to really start thinking about, people are going to get used to buying their groceries online. Amazon has the network effect. Many people already have Amazon Prime. Some people have Amazon credit cards. So you can see how this is going to make them easy to use. They're going to get branding, create the network effect. What is that going to do to a lot of small grocery stores? Mom and pop retailers, they're just not coming back. And I've been telling you guys that over and over again. we're going to see a lot of mergers and acquisitions. We're going to see a lot of bankruptcies. And I don't believe that we're going to get back to that bubble economy that we was in for the past 6-7 years. It's going to be difficulty mixed with opportunity. There's going to be a lot of contraction. A lot of companies that have too much debt, too much leverage. They're going to be forced to have to file bankruptcy, and that's just going to be their reality of what's going to be happening in the economy. And I hate to say it, but it's just the reality. That's what's going to happen. So if you are an investor, I keep stressing this, and I want to stress this to you again. You need to be focusing on who stands to gain and who stands to lose. So if you're looking to short right now, right? If you want to be short the market, you need to be looking at certain retailers who may not be able to survive this. Maybe they have too much debt. Maybe they're losing market share. Maybe they're not innovating. Maybe Amazon stands to benefit. Like Macys is in trouble. I wouldn't be surprised if you don't see Macys, either someone buy Macys or Macys ends up having to restructure and file bankruptcy as well. I would not be surprised. Just like how AMC is having to do the same thing right now. I would not be surprised. Because again, we don't know how much longer this may go. This may go on another 60 days. It may end at the end of this month. We don't know. But you have to think about the lingering long-term effects that this is going to have. Will this change consumer behavior and consumer sentiment? Like, will people want to go into crowded malls and shop like they used to? Probably not. And this goes back to a lot of the times when we're talking about cryptocurrencies and Bitcoin. If I came to you 20 years ago and I said to you that you would be more comfortable putting your daughter in a cab with a random person, which is known as Uber, you would say that I'm crazy. If I came to you and I said to you that you would feel more comfortable ordering your groceries online than going to the supermarket 20 years ago, you would say that I'm crazy. If I told you that you would be able to pick up your phone and call someone and see them through FaceTime or through Skype or through Zoom, you would think that I was crazy. If I told you that most businesses are going to cut back on their travel budget because rather than traveling to Vegas and do a meeting or a conference, they can do an online conference with Zoom, you would have said that I was crazy. But things change over time. And part of being an investor is you have to be able to see the future before everyone else sees it. Not follow the herd. Because herd mentality, I mean, you may make money, but then you may get dumped on, right? So everything is going digital. And you have to really start looking at who stands to benefit and who is going to lose in this environment. Because like 9/11, it fundamentally shifted and changed consumer behavior, privacy laws, banking laws. We got AML and KYC, a lot of new banking regulations and travel regulations and the whole Patriot Act stuff. And a lot of that stuff's going to happen now with this pandemic that we're facing now. A lot of things are going to change, and certain businesses will not be able to thrive and survive in this environment, and others will. They're already talking about digital money, right? So now you have to ask yourself, what type of digital currency do you want? Do you want one where they can track and monitor everything you do, or do you want something that gives you a level of privacy? These are things that you have to ask yourself, right? But you have to be able to look at what's happening because there's going to be a lot of opportunity. And I said this 3 times already, and I'll say it again. Right now, if I'm 5 years, 10 years from my retirement and I have to have my money in the market anyway, I want it in companies and businesses that I see are thriving in this environment and will continue to thrive. And when you look at the retail industry, consumer behavior and sentiment is shifting towards online. And then you start looking at millennials. Millennials are going to, everything we do is online as millennials. So there's going to be a lot of opportunity. And with that being said, let's look at the chat. We're coming up on 50 minutes. Let's see what's going on. You're 100% right about that Octane 10820. There's a rumor about Amazon buying Macys, and this goes back into doing research. Remember, Amazon's whole business is based off of you buy it today and you can get it tomorrow. Well, what Amazon is doing is they're strategically looking at what type of businesses like a Sears or Macy's or a J.C. Penney, where they have big stores where Amazon can basically stock their products and basically get it to you the next day. So that's what they're looking to do, looking to strategically buy up certain locations. And they're looking at Macy's because Macy's has a lot of prime real estate in certain locations that Amazon would like to be. So that's definitely something that they are looking into. Um, there's no reason to be buying platinum because the stock to flow ratio is just too high. Meaning it's easy to produce. It's easy to produce more platinum. It's not easy to produce more gold. It's extremely hard to find gold. It's not hard to find platinum. That's what gives gold. Gold has monetary value because of the fact that you can't find it easily. Like the more and more gold we pull out the ground, the harder it becomes to find it. It's not hard to find platinum. Right? Now, when you say AT&T has mountains of debt, you then have to look at the fact, though, is AT&T too big to fail? See, the Fed has removed price discovery. So you can't you can't get too caught up in well, they have a lot of debt, so that means they're going to just go out of business, because now you have to start thinking about, do they have the relationships in place to get bailed out? See, you kind of have to wear like two, maybe three different hats when you're looking at investing. You can't, on one end, you have to look at who has a lot of debt and can't service the debt. But then you have to look at the fact of who has a lot of debt, but they're going to get bailed out, because that may be an investing opportunity as well. Like if you can buy one of these airlines or these cruise companies and they potentially get a bailout, that stock may go up tremendously. So there's a lot of moving parts when you're looking at investing. You have to really start thinking about, figuring out what you really want to do. See what else is in the chat. See what else is in the chat. That's another thing with Boeing. Will America let one of its largest manufacturers go under? Do you think that they will let one of the largest manufacturers go under? I don't think so. Right? So you have to think about that. Like I just don't see how America's going to lose one of its biggest manufacturers, especially with the whole Cold War thing that's going on between America and China. And you're going to start to see a lot of countries put pressure on their businesses to take a lot of manufacturing out of China. So you can see a lot of manufacturers getting bailed out from the government, making that money printer go burr. And if the money printer goes burr, that means Bitcoin's going to perform well and gold and silver is going to perform well, and mining stocks are going to perform extremely well, and they pay good dividends. See, the reason why the dollar can't really go the route of Venezuela is because we are the reserve currency. So we have certain properties and benefits that Venezuela doesn't have. So I believe that it's going to take a major cataclysmic event before you see the dollar go away. So, see what else is in here. I'm buying Verizon stock, good dividend, too big to fail. Okay, not bad. I would say cybersecurity and digital currency, since everything is digital. So if one knows about computers, then we can do a lot of damage. Also, think about chip manufacturers, right? You got to think about Qualcomm, right? If everything's digital, understanding 5G technology, understanding self-driving cars, they're going to have a bunch of microchips in them. You have to start thinking about those companies who provide those microchips as well, and processors. So there's a lot of opportunity. And when you look at a company or technology, right, you have to start looking at like what components are inside of the technology that you're buying as well. Um, That's a good question, Taylor. I don't, to be quite honest with you, I don't see how a lot of small businesses can thrive in this environment. Like, I just believe that employees are going to be a liability the way that the tax code is structured and the way that you can't really compete with a lot of these companies. So I don't really see how a lot of brick and mortar businesses are going to be able to survive. I can't see it. I just don't. I don't see how small businesses can really compete on that level. Um, I believe I believe that this trend was already happening. I believe that the whole pandemic is speeding a lot of things up. Like, we were already in a bubble. The pandemic just sped up the crash. Like, the market was going to crash eventually anyway because it was all artificial. This just, sped up what was going on. When you looked at the whole baby boomer crisis, the fact that we got 10,000 boomers hitting retirement age every day, you know, what's going to happen with them? Like, that just sped everything up. The way that we blew a hole in the deficit with the tax cuts for the rich, now we're adding another $1 trillion+ to the deficit. Like, everything is just getting sped up now to the point where there's going to be a lot of fundamental changes in the economy. So things are going to be very fluid and dynamic. And I can't really tell you, as far as businesses is concerned, small businesses, what the future is going to look like, because we don't know what's going to happen with regulations, and we don't know what's going to happen to the consumer. Like, are consumers going to want to go out and shop the way they used to shop? Are people going to want to be in, tight spaces like that? What if the virus mutates? I mean, there's just so many things that are, yet to unfold. I would say definitely that anything that's involving technology is going to be profitable, right? Anything that's a part of, because technology is deflationary anyway. And there's just a lot of low hanging fruit that you can capture in tech. But like a lot of brick and mortar small businesses, I just don't see how they can thrive in this environment. Um, I just don't see it. No, I haven't read the book Life After Google. I've heard of it. So someone mentioned it in the chat before, but I never had a chance to really look at it. Um, but like, as a small business, you have to be flexible. I really want to stress that to you, right? Like, as a small business owner, you have to be very flexible and dynamic in this type of economy, because there are going to be opportunities that present themselves, right? You have to make sure that you're able to capitalize on it when it comes. You're going to have to do that. You're going to have to be flexible in your thinking, because we don't really, if you're like, you have employees and stuff like that, you just don't know what's coming down the pipe. 100%. Angelo Ed, this is going to devastate small businesses, because we're having a supply disruption where there's a lot of supply that's been taken out of the supply chain. And then you're going to have demand destruction where, you know, a lot of people don't have jobs anymore, so they can't consume. They have too much debt. The $1,200 stimulus isn't enough. It's going to be a lot of problems. You know, it's going to be a lot of problems. But see, VLB, I think what you're missing in urban populations, yeah, they'll be back in the stores. But you have to think about like the Midwest or upstate New York, where you don't have these big, dense populations, where everyone works at the strip mall, right? So when you start thinking about the fact that everyone works at the strip mall and the whole town depends on that strip mall, and then businesses can't thrive there anymore, or that Sears goes out of business, or that Macys leaves town, what does that do to that local economy? See, a lot of us, we live in these, we live on the coastal line. We live in these coastal cities in California and New York, and we see a lot of people moving around, but that doesn't that's not reflective and representative of the entire, country. Many people depend on those little brick and mortar mom and pop businesses. And if those businesses go away, it's going to be a problem. Like if you go to certain parts of upstate New York, like that Sears is important. That Macys is important. It employs a lot of people. So you have to really start thinking about what that's going to do. Thank you for a masterful presentation. Can you make a future video buying Ethereum step by step using the Nano X? Thanks for your analysis. I plan on doing that. A Ford stock, anti-China U.S. manufacturing return. I don't really know too much about Ford stock, but I can definitely see anti-China sentiment brewing in this country and bringing back a lot of manufacturing. I can definitely see that. I believe Trump's going to get reelected. There's no way Joe Biden can beat Trump. There's just no way. I mean, the guy can't put together full sentences. And that's why, now let's put my conspiracy theory hat on. I believe that the U.S. knew that this was going to happen. I knew that they probably knew that it was going to be bad. But they looked at the calculations and said, hey, this could be an excuse now to force companies to bring jobs back here. That's just my conspiracy theory hat. The King of Bakersfield, thank you for the donation. That's just me putting on my conspiracy theory hat. We got to talk about sports and how much of the economic driver they are for states and small communities like college football. It's hurting TV too. I'm glad you said that, Alexander Wilson, because I was also looking at, and thank you for the donation. That's a good video that I need to make, because I was looking at the NBA and how the NBA may not be paying their players going forward if the season doesn't come back. Think about that domino effect. How many people depend on, sports or depend on their checks? Like a lot of those NBA players live check to check too, because they have a very expensive and extravagant lifestyle. So, excuse me, there's going to be a lot of dominoes to fall. And that's why I was telling you guys, like, I would be careful running into just blindly buying the stock market. Like, AMC stock was already getting hit before this, but if you go back to the SPY, like, let's pull up the SPYs real quick. Where can I find the SPY chart at? Let's pull up the SPY real quick so we can see what's going on. I have it over here. Trading view. Let's pull up a chart of the S&P 500. Give me 1 second. Okay, full chart. Like when I look at the S&P, like I would not be running out right now to just go buy the S&P broadly. I just wouldn't. Like there's a lot of dominoes that have to fall, and a lot of bankruptcies that a lot of companies have to go bankrupt. Certain companies, they will not be able to survive in this environment. So I would be very hesitant. But then, what do I keep telling you? There's a flip side, because you don't know what the Fed is going to do. And they just $2 trillion here, $4 trillion there. I can easily see them coming in the market and buying stocks. So you have to pick which side you want to be on. If you want to be bullish, you have to know why you want to be bullish, and at what point you're right and at what point you're wrong. What has to happen for you to be right and what has to happen for you to be wrong? It's all about risk and reward. And if you want to be short this market, or you want to be defensive and you want to be in precious metal mining stocks, you want to be in gold and silver, you want to be in, because like crypto right now is correlated to the S&P 500, but I believe eventually that correlation is going to break apart. But you have to think about that, because the Fed is the wild card, because they have, Ben Bernanke and Neil Kashkari told you they have unlimited money. You don't know what they're going to do. Thank you for the donation, Clint Bastian. So you have to really, really understand that. But back to what Alexander Wilson said about, college towns that depend on football, that depend on baseball with no sports, um, even arenas. Are people going to feel comfortable going to arenas and being that close to people? Will arenas have to adjust how many seats are there? There's going to be a lot of are in an arena. There's going to be a lot of things that will definitely change. Like, it's going to be a fundamental shift and change. So you have to really start thinking about a lot of things that are going to happen going forward, and how that's going to impact people. So I really like that you put up there, Alexander Wilson. I'm really going to start thinking about doing a video on that. That's a really, really good one right there. Let me write that down. That's good. That is really good. Uh-huh. I agree with you, Charles Swain. Everything is going to be tech-based, smart cities, smart homes, smart everything. Yeah, yeah. I agree. Right. Sports make the rich richer. Ticket prices go up every year, and the middle class pays them. Uh, About to snatch up a beach house on a nice discount. If you can't sell in China, you're missing out of a lot of customers. And see, that's the wild card, Keith Miller. I'm glad you said that, because that's what a lot of businesses are looking forward to is the Chinese middle class rising and being able to consume their products and services, because they have 1.3 billion people over there. So this is what I was saying to you. You have to be very fluent in the positions that you take. You can't be married to one position, because things can change like that overnight. China can pass new laws, new regulations, and want American businesses out. Like you just don't know what's going to happen in this type of environment. So you have to make sure that you're not over leveraging yourself. You're not becoming emotional in your positions, and you have a plan and knowing when that plan is right and when that plan is wrong. If I'm wrong, like for example, if I see the Fed raising interest rates and I see them stop printing money and stop bailing out companies, at that point, my gold position is wrong. My gold thesis is incorrect, and I have to get out my trades. Like, I know when I'm right, what I need to see for me to continue to be right, and I know what I don't want to see if I'm wrong. If I see the Fed stop printing money, if I see the Fed raise interest rates, I need to get out of my gold positions, because gold is going to go down. But do you believe that that's going to happen? I don't see that happening at all, right? I see more money printing, but I know at what point I'm right and at what point I'm wrong. Bobby Boyd, if you want to donate, link to my PayPal is in the description. Take a few more questions. And guys, there's 283 of you watching. Hit the like button, helps the content ring. QE 1000, exactly. I don't see them stopping QE. I don't see them raising rates anytime soon, and I see the deficit getting bigger and bigger and bigger. I think they will, places like Delta are adjusting their seats to have more space to accommodate their customers. Yep. Helicopter money, you know it. No, I'm not a fan of ETFs personally. I don't like ETFs at all. That's not my thing. Mhm. Club venues, casinos, concerts. I believe casinos will be okay. Um, I even believe concerts will be okay, but like club venues, they're going to be in trouble. Yeah, I agree with that. A certain was Salvador Ortiz says, trust me, people are still going to go to a crowded event. Yeah, but it may not be as people may still go. It may still be crowded, but it may not be as many people as before. A 5% or 10% drop in your bottom line for a business is huge. Like that 5%, 10% of people going to that event may make the company's bottom line. Like a lot of these businesses, they make money off of the quantity, the amount of people coming in. Well, if you have just a 5% drop or a 10% drop in attendance, will do major damage to a lot of these companies' bottom lines. Like they're operating off of a very, very low profit margin, right? Like that 5% could be the difference between being profitable and not. So it still may be crowded, but it may not be as crowded as before, and that can definitely hurt businesses, and that has a domino effect that will play out. Yeah, very, very slim margins. No, I haven't read the book 33 Strategies of War. Um right now the book that I'm reading, I'm rereading The Black Swan right now. That's the book that I'm reading right now. I wanted to start a book club, but I don't have a haircut, so I can't really do a video. Like I look like a straight wolf. Like my beard is so big right now because all of the barbershops are closed that are near me, and the ones that are open, I just don't feel comfortable like with having somebody, someone cutting my face with a razor, and they probably use that clipper or razor on someone else's face. So it's like, nah, I'll pass on that. So I wanted to do a video and do a book club, and every month we'll do like one book, but at this point, it's like I have to wait to get a haircut because I look crazy. I look crazy. Rock Nation must be losing millions. Yeah, yeah. Think about a lot of the artists that depend on touring, right? Like really think about that, right? Like think about the artists that depend on touring, and the people that go on tour with them. They're hurting right now. Think about venues and ticket sales. Like as I said before, this has cascading effects, and it's going to definitely ripple through the economy. You know, um, because I want to target certain keywords, which is why I want to do a video. Like I want to target certain keywords because when you want to grow the channel, right? The way that YouTube is structured, like you can't just stay on one particular segment. You have to talk about, like, for example, if I'm talking about the creature from Jekyll Island, like if I want to get that audience to start watching my videos, I have to make a video about the guy G. Edward Griffin. So that's why I want to make a video so that I can start growing the channel to get a little bit bigger. I don't want the channel just to stay stagnant. I want to grow the channel as well. Mm. So that's what I want to do. So like I want to start talking about the book so that I can get other people who are interested in that book to subscribe to the channel so I can grow the channel. Yeah, I'm iffy on Earn Your Leisure. Um I'm iffy on Earn Your Leisure. I've seen them. I you know, they have a lot of people on that platform that I don't really like. But I shouldn't be petty like that, right, guys? I shouldn't be petty like that. So, um, I shouldn't be petty. I've watched a few of their videos. They have some informative guests that come on there, and they have a lot of BSers that come on there as well. So I think it's a good podcast overall. But like they had Jay Morrison on there. I was like, oh my god, like they had Jay Morrison on there. I was like, oh, so but yeah, I'll do that podcast with no problem. You know, I'll do the I'll definitely look into it. Thank you for the donation. I Dave Ramsey has a lot of good information, but then he has some other information. It's just like it's like most people. They have some good information and some bad information. You have to figure out what works for you. That's why it's called personal finance. I don't really to be quite honest with you, Zulu Immortal, I never really read any books on like how to build a business, right? I just got out here and started. I believe in trial and error. I'm a big fan in learning through experience. I'm a very, very, very big fan. I'm hands-on. I like to do things. Excuse me. You know, uh, as far as Dave Ramsey had a bad experience with debt, which is why he hates debt. And he also brings his religious beliefs into a lot of his investment thesis and beliefs. Like he's one of those guys, he's like, anti-debt, and he's one of those people who he believes credit cards are bad. And I vehemently disagree with that. If you use your credit cards the right way, credit cards are beautiful. Like if you understand how to use your credit card, you can create a lot of wealth for yourself very, very quickly. For example, if I'm working a job, let's say I make $100,000 a year. After my bills, after taxes, I probably bring home, forget the bills. Let's say after taxes. After taxes, in New York, I'm probably bringing home 60,000. After living expenses, rent, cost of living here is high. I'm lucky if I could probably save $10,000 a year, right? For the average person that even makes six figures. I can go on to Bank of America's website right now and enter in my social security number, and out of thin air, get a $10, $15, $20, $30,000 credit card like that. I can walk into a bank and sign my name on a dotted line and create $100,000 loan, $200,000 loan like that. I can go and find an investment property that's below market value and out of thin air borrow $200,000-$300,000 and have an investment cash flow making me $200-$300 a month on top of it paying for itself. So if you understand how to use debt and leverage properly, you can create more wealth and more money faster out of debt than you ever could create out of saving. You're losing 3% every year just from putting your money in a bank account. And that's if you believe government data. You're losing 3% right there. I can go and hit my credit. Like I know how to go get 3-4 credit cards at one time, and I can create $40,000-$50,000 in available credit with 0% interest for the next 18 months. Right? Like literally, like I can, out of thin air with just my credit, I can go and, because remember, I have multiple LLCs, right? My LLCs are established now for years, so I don't have to put up a personal guarantee. I can then go do a line of credit. I can do balance transfers and keep my my credit utilization below 30%. And that's the reason why you want to grow your credit. Like a lot of people say, oh, I don't like credit cards. That's dumb. I want more credit cards. Just don't use them. Like that's all you have to do is just don't use your credit cards. Be responsible. So now think about it. As my credit limit keeps increasing, it goes from 5,000 to 7, from 7 to 10, from 10 to 15, 20. That means now when I open up new cards, they're automatically throwing 10 grand at me, 12 grand at me. I get credit card offers in the mail every day or every other day. So I'll put some credit cards in this business. I'll put some credit cards in that business. Then I have my own personal credit cards. And then, okay, the interest rate's about to go up on this card. I'm about to lose that 0% APR. I just do a balance transfer and I just transfer the credit card balance from one card over to the other card. And I just move money around. But you're going to create more wealth and more money faster than you can ever save it. That's just the reality. Right? Now you have to be smart with debt. Like I keep trying to tell you guys that there's good debt and there's bad debt. Like if I take a credit card that has 0% interest and, I take out, let's say it's a $15,000 credit card and I put $5,000 on that credit card. Well, I can pay that off over time. I have 18 months to pay that off. I'm not worried about that. I'm pissed off if I bust my ass working for a year to save $5,000 and I put it into something and it doesn't work out because I use my time to make that money. So you have to be mindful of that. And like someone said, yeah, car loans are horrible. So, and I prefer credit cards because they're revolving. See, when you get a regular loan, I don't like traditional conventional loans because once you pay it off, you can't tap into it again unless you go back to the bank and have them underwrite it for you. With credit cards, it's revolving. So once I pay it off, I can use that money again. And then I'm going to get rewarded if I'm doing it the right way by them raising my credit limit. So I can keep tapping into that. So I prefer to use credit cards all the time. I'm a credit card junkie. Like I'm a credit card junkie to the T. And I believe in, using other people's money. Like I'm going to use the bank's money to create money. I'm not going to, because again, like I said before, you can't save money fast enough. Inflation is going to hit you. Life expenses is going to hit you. And understanding the way the economy is structured, you have to use debt to some degree. You just have to be smart with it. That's all. Be smart with your debt. Don't be dumb with your debt. Like don't go get a credit card, and go sign up for a mentorship with a scam artist and don't get nothing out of it. Like you have to be smart with your credit and know how to utilize it. And like I said, I know how to shuffle money around where I know how to always keep my utilization below 30-40% because I'll move credit from one business to the other business, or I'll move that balance from one credit card to another credit card, and I just keep shuffling it around. But again, like I said, saving money to start a business is hard. Like I believe in saving money for emergencies, like having emergency cash. But to grow my business, I want to use that. Like think about it. Just because I have I have some credit cards that have like $40,000, $50,000 on it. I'm not going to use the whole $40,000 just because I have it. Right? I'm not going to use it, but guess what? Banks like to see you using that credit. So what I do is I'll max the card or I'll take it up to 70-80%, but I'll park the money in my bank account. I won't spend it. I'll just put it in my bank account. And I'll use the bank's money to pay them back with their own money. But while I'm paying them back with their own money, they see that I can carry a balance and pay them back. So they give me more credit. Right? They want to see you using the credit. Like if you get a credit card and you just don't use it, they're going to be like, okay, we're going to cut your limit. Like if you have a $10,000 credit card and you don't really use it like that, they're going to cut it. But if they see you using it, remember, you're not using it to buy anything. You're using it to park the money in your bank account, and then you take the money out of your bank account and just pay back the card. They're going to bump your limit up in the next 4, 5, 6 months. I've done it. Trust me. I do it all the time. 100%, John. Nothing. Everything's based off of debt. In New York, think about it, ABCD. In New York City, if rent alone, if you want to get a 1-bedroom in New York City, you're talking about $2,000 a month, right? And that's low. I don't mean a cash advance at all, DJ Cadillac. I don't mean a cash advance at all. Cash advances, they charge you 22% up front. I'm talking about there's ways where you can take the money off the credit card without it being a cash advance. It'll just be a normal charge. Go and do your own research on that. I'll save that for when I make a course. But excuse me. If you live in New York City, taxes, as a single person, your taxes is going to be like 40%, maybe even more. So let's say you make $100,000. Right off the back, you're only netting 60. Off the back, 60. Now, rent alone in New York City to live in a decent neighborhood, easily for a 1-bedroom, you're paying $2,000 a month. Easy. Well, that's $24,000 out of the 60 that you have. So that leaves you with $36,000 right there. And that's just your rent. Now let's start talking about your Con Edison, your Spectrum bill or your Verizon bill, like home bill, groceries, right? Like living, laundry, stuff like that. I mean, your money can go quick. So if you can save 10,000, you lucky if you can save 10,000 in New York City off of 100 grand. Remember, like it's expensive to live in New York City. It's not cheap. And we're not even talking about a car. If you have a car, forget about it. Insurance, full coverage insurance, you're easily paying like $280, $360 for full coverage insurance. Then don't have like a decent car. You're paying another $600-$700 if you have a decent car. It's $1,000 right there. So listen, to have to save 10,000 in a year, you lucky. You know, like it's expensive to live in New York City. And I remember, I'm being modest. Don't try to live in like a nice little condo or a brownstone or new construction. You may be paying $2,400-$2,500. Right? Then don't forget, you may want to go to, if you're young, you're going to want to go out, hit the clubs, hit the bars. You're going to need outfits. Dry cleaning's very expensive. Like, listen, it costs money to live in New York. It's not expensive at all. $100,000 is nothing. Right? $100,000 in New York City that's nothing. Nothing at all. Like Angelica Pickle says, if you don't want roaches and mice, that's another $3,000. I mean, $3,000 altogether. So listen, it's expensive. Mm-hmm. Of course, I trade on margin. Ninja Trader has really, really good margins. Um, I don't know the median income in New York. I just know that it's very expensive to live in New York. I understand that New York is very, very expensive. You don't do a cash advance on your credit card at all. Like this, that would be one of the worst things that you could ever do. Your credit card will give you checks. They will give you balance transfer checks. Again, when I tell you something, you have to go and do research on it and read between the lines. There's ways where you can take money off your credit card and it's just a regular charge. It's not a cash advance. And you can take off the whole entire balance. And it's not a cash advance. Go out and do your research. It's called credit cycling. When you want to cycle credit, because you're trying to build up your credit. So I'm not going to use my money to build up the credit card, right? Like if they give me a $5,000 credit card, I'm going to take off $4,000 of the credit, the available credit. I'm going to put the $4,000 in my bank account. And every month I'm going to use the $4,000 because remember, we talking about a credit card with 0% interest. Right? When you get a new credit card, you want to get a good credit card, right? Most good credit cards will give you a credit card for 0% interest. I'm then going to use the bank's money to pay back the credit card. I'm not going to use the credit card for nothing. I'm just going to take the money off the card, put it in my bank account, and then I'm going to take the money that's in my bank account, that's the bank's money, and just pay back the card. I'm basically using their money to pay them back. Why am I doing that? Because I want to show them that I can carry a balance and I can pay them back. Because what they're going to say is, hey, Eli uses this credit card. And remember, banks want to get you in debt. So when they see that you are a high volume user and you use the card a lot, They give you that teaser rate to lock you into debt because most people are dumb. They say, oh, the credit card's 0%, and they max the card out going on vacation somewhere. And after 12 to 18 months, when the interest finally goes from 0 to 22, they still have a balance left. And that's what most credit cards bank on. I'm telling you, be smart, right? Don't be dumb. Don't use the credit card to go on that trip to Vegas for spring break. No, use the credit card to park the money here and pay them back with their own money. Because then the bank's going to say, you know what? We're going to bump up your limit. And then they're going to bump your limit up. So now when you start applying for new credit cards and they see you have a $15,000, $20,000 available credit, they're not going to start you off with $500. They're not going to start you off with $1,000. Right? What can you do at $500? Nothing. But if you have a big available credit on one card, they're going to see that and they're going to say, okay, well, this person can handle debt. Let's give them $5,000. Let's give them $10,000. Right? And again, it's not financial advice. It's just, I'm just telling you what I do, and it works beautiful. I have a lot of available credit because it comes out of thin air. And like my mentor always taught me, I'd rather be able to have the access to it and not need it than need it and can't get it. Because the way banks are structured, when you need capital, they're not going to give it to you. Right? Like I want it. I'd rather have comfort knowing that if I need to touch $50,000 or $100,000, I can touch it, than need to touch $100,000 and can't touch it because, I don't have any available credit or my credit limits are too low and I got to try to go to the bank and apply for it. That's the worst time. But if you get you good credit cards, you don't have annual fees. Like I have good credit cards. I don't have an annual fee on most of my credit cards. And I don't mind paying $45 or $95 an annual fee for a credit card if, they're giving me $4,000 or $5,000 every 3 to 4 months. I could care less about $95 because what I'm putting my money into is going to make me more than $95. Right? Like I put my money in. I put my money in crypto. I 4x my money with a credit card. I 4x my money when I brought Tron with a credit card. I 6x my money when I brought Ripple with a credit card back when the bubble happened. So you understand? Like I'm thinking long term. Like I that $95 fee or $45 annual fee means nothing to me. Because I'm going to make more than $95. Remember, I'm talking about trying to make money. I'm not talking to, listen, if you're just a regular person that just, go to work every day, you just want to have 1 or 2 credit cards, that's cool too. Mm-mm-mm-mm-mm-mm. 100%, Mr. Short Dollars. Having access to capital is invaluable. Get it when you don't need it. Because when you need it, they will not give it to you. I can promise you that. The only way I can see you getting out of a car loan is basically paying it off. That's the only way I can see it. I think car loans are one of the worst things you can do. That's one of the worst things you can do. Well, Sharice Pendleton, what you can do is, if you make your payments on time, sometimes you can get it extended for another 6 months. But so you have to understand, like every year and a half to 2 years, I'm applying for new credit cards anyway, because the inquiries are rolling off every 2 years. So I'm always applying for new credit cards anyway. Always. And even if they raise the rate, they give you balance transfers where they charge you 3%, but then whatever you transfer is 0% for another 12 months. You just got to make sure that you're calling your credit card company and checking up and saying, hey, do you have any offers right now? I'm just telling you, man, credit cards is, if you use credit cards properly, that's the most powerful way to build. Like, if you understand what you're doing and you're not doing stupid stuff with your credit, you can make some stuff happen. And you can set it up where you're not over leveraging yourself. Like, remember, if you put your savings into something and it fails, you lose all your savings. But if you use credit to do it, you can pay that credit back over time. So it gives you flexibility and room to maneuver if you do things the right way, if you structure it the right way. Of course, every time you apply, which is why I do it every 2 years. Because remember, like, number one, when you apply for a new credit card, it's an inquiry, so it's a hit. But when you increase your credit limit, that's not a hit on your credit. You just calling your company and saying, hey, bump my credit up. Those are two different things. I prefer, honestly, like me, I like, if you're cost conscious and you're looking for a good deal, you're always going to get a better deal buying a used car. Like literally, like, you're always going to get a better deal buying a used car because cars lose so much value within their first year. So if you're conscious about, hey, I'm going to have this car for the next 5, 6, 7, 8 years, then always go used because you're going to save more money getting a used car. Maybe 3 years old, 5 years old, you're going to save more money. But if you're someone like me, you're young and you want to get you a nice car and you want to show off, then I would prefer leasing them. Right? Like, I would prefer leasing them than owning like, I would never buy a brand new car. Like, I just wouldn't do that. I would prefer leasing them because that way you can give them back. But you have to be responsible. You can't go over the miles. You can't treat the car like it's, a dump and just, tear it up and mess it up. You got to really take your time you got to be smart with it. But again, if you're conscious about saving money and price, it's always going to be better to buy a used car. And when I say used, I don't mean like 20 years old. I'm talking about something that's like, within that like 5 to 7 year range. That's a good value for a car that's reliable. It's not going to break down on you. And, you won't be overpaying for it. Right? You know. So that's the reality. But like I said, if you're young, I would always say go with the lease. So, ADOS senior analyst, all you have to do is go and just Google credit cycling or look on YouTube. There's a lot of people who talk about it. Like, what I'm saying to you is nothing new. A lot of people do credit cycling. I'm telling you, it works. It's if you do it the right way, it works phenomenally. Understand that when I'm leasing the car, I'm leasing it through my business, right? So most of the expenses on that car is going to get written off anyway. So this is why, like, I prefer to do the lease through the business because, like, the miles, like all of the extra miles I put on the car, the gas, the wear and tear, like a good percentage of that, I can write it off as a company vehicle. So that's like less taxes that I have to pay. So that's why I say it's important that you structure things the right way, because if you structure it the right way, you're going to get a lot of rebates and discounts when you lease the car through the business, and then you're going to be able to write a lot of that off on taxes. So at the end of the year, you'll pay less taxes. Because remember, I have to pay taxes back at the end of the year. I don't get a tax return as a business owner. So I get to file a lot of that off as a deduction. So this is another thing you have to think about. So, that's something that you have to think about. Like, when you own a business, you get to write a lot of that off. So, I prefer an LLC. That's all I've ever dealt with. I prefer so, and the guy I use, he's pretty good. So he told me the benefits, and that's what I went with. Yeah, well, if you're not a business, then that's different. But that's why I was saying if you're financially conscious about money, then I would always say go with the used car. That's a good video to do as well. Darnell Edmond, LLC versus a sole proprietor. Let me write that down too. That gave me some really good topics today. Damn, my iPad died. I like that. So I got the sports impact that Alexander Wilson spoke about, and um, I like um, I like what you said, Donna Edmond, about the LLC versus sole proprietor. So, but from my understanding, you get more benefits, like more protections with an LLC than you do with the sole proprietor. From the way it was explained to me, and that's why I always encourage you guys, make sure that you get, like, if you're going to be a business owner, get legal advice from a person who is like an attorney. Don't get legal advice from someone on YouTube. Like, whenever a person is talking to you about legal matters, get an attorney. When you're talking about like accounting matters, get an accountant. They're cheap. They're not expensive. You should not be paying more. If you're like a small business, you should not be paying more than like $200-300 at the maximum for like basic stuff that you need in your business. You should not be paying crazy amounts of money for an attorney. You should not be doing that at all. Yes, I've heard of Velocity Banking. I learned a lot from Velocity Banking. Isn't that with the black guy, right? Velocity Banking, if I'm not mistaken. You know. Um Nah, it's not per hour. It's not per hour. Like the attorney that I use, me and him have a relationship. Like once you build that relationship, you $200-300 an hour. No, I'm talking about like for the whole process. Like if you have something big that needs to be done, like if you need to amend some documents in your articles, or the way your organization is structured, like as far as getting your LLC incorporated and set up and everything, like you shouldn't be spending more than $200-300, and most of it you can do for free. Multi-level marketing, I feel, is good for people who are fresh, brand new. They need to be a part of a group to learn and grow and really get that philosophy and that mindset. But you're not going to make any money. You're not going to make any money. Reality is you're just not. Um, Most network marketing and multi-level marketing is not. It's not structured to make money. It's really structured just for you to learn without really spending a lot of money up front. If you, in today's world, with the way the internet's set up, there's no reason to be doing multi-level marketing. There's just no reason for it. I mean, you can create a YouTube channel for free. You can get a Shopify store, get a merchant account through Stripe or PayPal. You can create your own courses right from your MacBook. Like, there's just no reason why you need to be doing, multi-level marketing. You can source products from AliExpress, straight from vendors if you want to sell it. Like, you can design your own products. Like, it's just, you can get a 3D printer, make your own clothes. Like, there's just no reason why you need to be doing network marketing if you're really serious about business, right? Like, to me, network marketing is really just for people who need mindset development. Like, you never read Rich Dad Poor Dad. You don't really have a circle and a sphere of influence. You've never really done nothing like that before. You need that support, right? We're human, so humans need to be around other human beings. You need to be in like a group and kind of get motivated, because starting a business is going to be it's very lonely being an entrepreneur. It's hard, it's a grind, it's not easy. So you're going to go through those battles, right? So I all the time trying to encourage you guys to understand that, like, network marketing is more for you getting that mindset and that development and having a support group. I think that that's what it's good for. Like having, but as far as like making money and the way it's structured, you're not going to make any money, right? You're not going to make any money, right? Like, so you have to go with that. So that's why I always try to tell people, that's what network marketing is good for. It gives you time to develop. right? But other than that, like just look at the data. Like network marketing, most of these companies, the way it's structured, all of the money goes to the top. Yeah, like Riddick got beat said, I was a part of Amway in my 20s, didn't make any money whatsoever, but got a lot of mindset material. And like I said, I think that that's what it's good for. I think that, you know, getting that personal development will really help you push through a lot of the obstacles that you're going to face as an entrepreneur. That's why I'm happy that I started with network marketing, because number one, you get to realize that most people are dumb, right? Like seriously, most people are really, they're deaf, dumb, and blind. They don't know what they don't know. So as an entrepreneur, you can't assume that your customer knows what they want, or knows how to use your product. So it's going to force you to really um really think about the end user of your product and make it so simple for them. Like that's what made Steve Jobs one of the most like prolific entrepreneurs ever, because he made technology easy. He assumed that no one knew how to use a computer or use their phone, and he made it easy where you don't have to think. You don't need to program anything. You don't need to buy anything. Just open up your MacBook and it works. I think that that's an important factor to learn as an entrepreneur, and getting that mindset. Zulu Immortal asked a really important question too. He said, how do you deal with the fear of failure? By just failing, right? Like that's the reality. Like as an entrepreneur, you just have to fail. I'm just gonna be honest with you. You just have to fail. There's no getting around it. You have to fail. But I think that one of the worst things as an entrepreneur, and I struggle with this as well, like working from home, if you don't have a schedule and a plan for your day, you will waste a lot of time. Like one of my biggest problems that I have is not sticking to my schedule. Like you have to have a schedule. Like at 8:00, I'm going to wake up and I'm going to do this. At 9, I'm going to do that. Really like have goals, have a schedule to keep yourself accountable. That's how you that's how you overcome laziness, that you overcome, fear of getting started. Like tell yourself at 9:00, I have to make this call. I have to, and track everything that you do so that at the end of the week, you can sit down and look at your tablet or look at your pad and say to yourself, did I make those 20 calls this week? Did I go hit the gym like I was supposed to? Did I make 5 videos this week? Like, because like a lot of times I'm slacking on I slack a lot. Like on my Instagram, I'm not uploading enough content on my Instagram. And most of the time my phone is in my hand. I'm just being lazy. Like you have to really set a schedule to force yourself to do things. And that way you get over the fear of failure, because you forcing yourself to do stuff at a certain time. Like that's if it's anything that I'm horrible at time management, and I have to get better at that. Mm-mm. Mm-mm. Shaking my head. I gave Prime America a lot of cheap labor. You know the funny thing, Lou H? Uh, he says, Eli, what helps you focus on boring topics? Well, most of the things I'm into are not boring to me. So like if something's boring to you, maybe you're into like the wrong stuff. But like, like I love like tech, coding, programming, blockchain technology, trading, researching, like all that stuff's fun to me. Like, so I find fun in that. But I've been to a few Prime America meetings. Like someone mentioned, 5 Links. I remember they had World Ventures. What else? What else was around? There was Organo Gold. What other companies did I went to their meetings? Organo Gold, 5 Links, then Prime America. There was another one. I'm trying to think of it. Um, damn, I can't think of the name of the company, but there's a lot of pyramid schemes. Um, damn, I'm trying to think. What was the other company? Um, I can't think of it right now at the top of my head. I like Gary Vee. Gary Vee is very practical. I was in MCA. I got a lot of chargebacks on MCA. MCA was a good company. MCA wasn't bad. I was in MCA, but I wouldn't consider MCA. I wouldn't consider MCA a network marketing company. I would consider them more of an affiliate marketing because you're like an affiliate of the actual company. But Gary Vee, I like Gary Vee because Gary Vee is very um practical. And that's what I try to tell you guys all the time. It's not about trying to make millions of dollars. You know, it's about making a living doing something that you enjoy doing on your time. And that may be $60,000 a year and you may be happy and comfortable. And with the internet, like I said before, one of the blessings that's going to come from this whole pandemic thing is that a lot of you are going to get a taste of working from home and you're not going to want to go back. And when a lot of these small businesses go out, it's going to open up a lot of online opportunities to create businesses. So while one door may be closing, another door may be opening. And this is why I keep trying to steer you guys towards the free courses on Udacity, the MIT OpenCourseWare, not because I want you to go be a programmer. I'm not saying that like programming is going to solve your problem. What I'm saying is that it opens up the door to start seeing the possibilities as to what you can do online, working from home. And, you know, you can make $50,000 working from home. It's not hard to make $50,000 working from home. It's not. It's not hard to make $40,000 working from home. It's not at all. You know, there's a lot of opportunities that you can make money from. You just got to start searching for stuff, legit stuff though. None of this, you know, ACC and the BCC and the DCC, no schemes, but like real legit stuff. You know, like find a product online and create an entire, I told you guys before, like with drop shipping, find a good iPhone case. Like there's some people, like I came across this girl the other day, her whole YouTube channel is about selling iPhone cases. Like she buys iPhone cases and she reviews the case, and her whole YouTube channel is about iPhone cases. And you would be surprised about how many people every day get up looking for reviews on an iPhone case. And her whole channel is about that. And then inside of the description, she has an affiliate link for all of the products and stuff. And I guarantee you, between Google AdSense and the Amazon affiliate stuff that she do and the other things she do on the side, she's probably earning like a good $50,000, $60,000 a year doing something that simple. Right? Simple, not complicated stuff at all, you know? People do that type of stuff all the time. Just reviewing a product. Right? Some people, their whole channel is about cameras and camera lenses. And I guarantee you they make a hell of a lot of money doing that. And you don't need hundreds of thousands of subscribers. Like, for example, I just brought the microphone, right? All I can do is give you the information. I can take you to the water. You have to go figure out how you're going to drink it. I just went and brought the Zoom Live Track 8 mixer. I had no idea how to set it up. So guess what I did? Went on YouTube, watched other people's videos. Right? So every day, think about it. There are people like me that's buying a microphone or that's buying a set of speakers. So you could be the person that your whole channel is based upon reviewing products. your whole channel could be about just reviewing products. There's some YouTube channels, all they do is review movies. They go to the movie theater, they watch a movie, and they review the movie. And then what they do is they get sponsors, they sell merchandise, and they make a living doing that. And I'm trying to tell you, YouTube is the second largest search engine in the world because it's second to Google. Right? Google owns it. And most people prefer to watch content than read it. I'm just trying to tell you that, you know, there's plenty of opportunity. But remember, Angelica, I'm talking about low level stuff. There's people that make $1 million a month on YouTube. Like, what you want to make YouTube, you can make it. Go look up someone like Graham Stephan or Meet Kevin. Go look up some of these women who do makeup tutorials all day long, right? Like, they make big money. Like, you don't have to go. There's so many different niches that you can go into. Like I said, like I came across a channel. This guy's whole entire YouTube channel is about reviewing microphones. So if you want to learn about a microphone, he's mastered like every microphone. So like I said before, I'm just telling you guys there's opportunity. There's a lot of opportunity out here if you take the time out to do the research. Like Riddick Got Beat said, there's a guy who just does timelines of Game of Thrones, Marvel, Star Wars, and sells affiliate merch. For example, I got the video game Doom Eternal, right? There's a guy's YouTube channel. It's all based upon Doom Eternal. His whole YouTube channel is based around the Doom franchise, right? So he talks about the lore from Doom. He sells the action figures, the game. Find something that you like, and you can create an entire entity. And remember, I'm just talking about one platform, YouTube. You may want to do it on Instagram. Like, there's other platforms to do it on, right? Like food channels. There we go. That's another one. Some people, they just do food tutorials. There's so much opportunity if you take the time, get rid of the conspiracy theories, get rid of the whole drama, beefing, this one, that one, and really start looking at the opportunity. Why do you think I'm on YouTube? Because I see the opportunity here where you can reach more people. I can reach more people on my YouTube channel, quality people, than I ever could reach off of just trying to like talk to people in Starbucks. Ever. Like ever. Like even business wise. Like I have people messaging me like, hey, yo, I want to invest with you and all. I'm like, I'm not doing that right now, but it's just like, you'd be surprised how you don't need thousands of people. You only need like 5 or 6 really good people to believe in your idea, and you can start a business, right? Think about it. Seriously. Like, let's say you needed funding or whatever for a business idea. You don't need to go out here and really even borrow money. You can find people to borrow money from on the internet at better terms. Or that may want to invest in your idea if you like present your idea professionally. Like, there's a lot of opportunity here. There's a lot of opportunity here. You just got to be honest, truthful, be knowledgeable about what you're talking about. Don't be a fraud. Don't be someone out here trying to sell dreams. Like really take your time and become a professional. Read, research, know what the hell you're talking about. And trust me, I'm telling you, you can make it happen. And you'll be able to make money honestly and ethically without scheming or scamming on people. And you can make a living. Look what Salvador Ortiz said. That's another thing. Something audiobook. There's a lot of people that don't like to read, but actually prefer someone to read it to them. Yeah, there's a person that just reads books. I've come across channels like that before too. Right? You just find what you got. You're right, ADOS senior analyst. A lot of people ain't got it. So you know what? Develop it. Right? A lot of people don't have it. So develop it. Grow. That's all. Grow. We're not born. All of us are not born with the gift of gab and can speak well and all that. Grow. If you came to my channel when I first started, my videos sucked. Over time, my videos are getting better. From time to time, if you watch my video, I may say a word wrong. I may pronounce a word wrong, right? I may stumble on my words. Yesterday, I went and I started streaming and my audio was messed up, right? Like you're going to make mistakes. It's never going to be perfect. You're going to have trolls. You're going to get haters. That's a part of it. Have a growth mindset. I guarantee you a year from now, my public speaking will be better. My quality of my content will be better, right? Because I have a growth mindset. So yeah, the trolls, they're going to nitpick me when I say something wrong, and that's going to happen. But I don't care about them because I don't do this for their approval. I don't do this for their approval. I do this for me because I understand I'm trying to get better at what I'm trying to do. I know what my purpose is. And I want you guys to understand that you're going to make mistakes. People are going to laugh at you. Some people are not going to believe in you, right? It's going to happen. Right? Just take your time and build it. And as you get better and better and more knowledgeable, you'll start to see you're going to become more confident on the camera. You know, you're going to be able to articulate yourself better and put your words together. Like I see myself getting better. That's all. Right? Don't judge yourself where you are today. Have a mindset as to where you can go and what it can become. That's how I look at things. Have a growth mindset. You know, because I guarantee you, in a year's time, you'll look back at your old stuff and be like, wow, I got better. You know, but there's software, Will Green, where you don't have to show your face and you can change your audio, you can change your voice. Right? You can change the way your voice sounds. You could be like Jason Black. You can change your voice, right? So you can do it like that. You don't have to show your face. You can do voiceovers on audiobooks. That's all. Change your voice like Jason Black. You'll be good. You know, that's all you gotta do. So, but with that being said, guys, we're coming up on 2 hours. I don't want to keep the stream going too long. So I'm going to leave the live stream here. Go back if you want to learn about the stimulus check, when you're going to get your check, how to file for your check. I'll drop the website in the chat again for you guys. Copy. So you guys can go here. Remember, go and do your due diligence. Get the money if you can. For the loans, make sure that you get your confirmation number that's on the actual web page, because they don't email you when you fill it out. And if you made a mistake or you didn't get any word back, contact them and fill out the application again. And with that being said, guys, have a blessed and beautiful day. Please like the video, share the video, subscribe, hit the notification bell, join the mailing list. Thank you to everyone who's donated and supported the content tonight. And make sure you join the mailing list. I'll see you guys tomorrow.